Muchísimas gracias. Bueno, sí, nos quedan unos minutos para el cierre en una jornada negativa que obviamente habíamos anunciado ayer cuando teníamos el especial de los 100 días de Donald Trump. Muchas gracias, Alma, por darme paso a la transmisión desde lo que es, como ustedes saben, Negocios TV América. Hoy hay noticias sobre lo que pudiese pasar, que me llegan a la sala de redacción. Pónganse ese cinturón de seguridad que en 10 segundos les tengo una sorpresa importante, pero quiero que sepan que vamos a hablar de lo que pudiese estar pasando con la deflación e indudablemente aquella famosa frase que dice por ahí que vende en mayo y vete a descansar, sell in May and go away, además de lo que vemos con el Bitcoin y con el petróleo que indudablemente está marcando nueva pauta. Para que ustedes tengan una idea, casi 4% abajo el petróleo el día de hoy. Eso es muy importante porque efectivamente le da la cachucha a quienes hablan de deflación. Y fíjense ustedes, porque ustedes entienden de que nosotros dentro de Negocios TV tenemos una cantidad de responsabilidades con ustedes. Hemos traído a un invitado que le pido al equipo de producción que por favor lo ponga, que es uno de esos personajes que indudablemente todos hemos visto y todos hemos seguido y tiene mucho que explicarnos el día de hoy. Yo hablaba un poco con él tras bastidores. Él no necesita carta de presentación. Su nombre es Edward Yardeni. Él es el presidente de su propia firma que, como estaba contándome, puso en el año 2007 y es sumamente influenciado por toda esta cantidad de cosas que están pasando a nivel global macro, además de que muchas de las, digamos, televisoras en inglés lo citan constantemente. Le doy la bienvenida, le doy las gracias. Ed, thank you for coming to our Negocios TV station. And I think the first question, as I telling you that we're very happy to have you here, is we want a full explanation on what to expect with everything that is happening today with the PCE, with the PIB, GDP, sorry. It's very important to see the markets actually very confused. So I would like to know what do you think about it and how you can help us to understand this, Ed. Thank you.
Well, yes, I think the Federal Reserve is on hold. I don't think that they are in any rush to lower interest rates. As we saw, there's still inflation above 2%. It's not down at 2%. And this was March data, first quarter data, that will be followed by some inflationary pressures from the tariffs. And I think the Fed hopes that the tariffs will create a temporary inflation problem, but they're not sure of that. And so I think as a result of that, the Fed will not be lowering interest rates anytime soon. The first quarter GDP numbers really weren't all that weak. There was a huge increase in imports as retailers and wholesalers tried to buy before the tariffs, and that depressed the GDP numbers. But the consumer was still quite strong, and capital spending was very strong. Apparently, businesses are coming back and increasing their productive capacities in the United States. So it's, I think on balance, the news is still pretty good and really doesn't require the Fed to lower interest rates.
Listen, and I hear you recently in other interviews that you've been doing across the media that you mentioned that probably you don't see that we are in a bear market. You think that we still on an uptrend with a correction.
Correction, yes.
And obviously we are in that trading range where we saw the low. I think it was April the 8th of around 4,800. And then obviously we're right there at 55. What do you think it should happen? Because obviously we're at that range and there is still plenty of data we need to basically understand, which is just probably the non-farm payroll on Friday. And we also going to see what the Fed is going to do next week, if they're going to change the language. And obviously the 10 years at 416 is kind of pricing a potential change of the language. Right. I want your explanation towards that, because that is the only way you can regain certain levels on the tech. And obviously they are reporting today and tomorrow.
Well, I think the stock market's actually holding up surprisingly well. There are a lot of economists who think that we are going into a recession. It's certainly a possible scenario. I think that there is certainly a recession risk, but I'm thinking that the economy is is going to avoid a recession this year. It may be very slow growth, but I think the stock market is looking past this year into 2026. I think we made a low, as you said, on April 8th. That was a correction low. The market was down a little over 18%. It did not go into a bear market territory, and the NASDAQ did, but only for a few days, and that's rebounded as well. I think from here on, because the President Trump postponed the tariffs on most countries except China, postponed them for 90 days. I think over this period, we're going to get some good news. And I think the president needs to declare victory. The progress has, in fact, been made in coming up with agreements with other countries on fair trade relationships. And I think that'll be a positive for the market. If the economy is too weak, I think investors will anticipate that the Fed might, in fact, lower interest rates. I don't think it's going to be necessary. But the market, I think, believes that the Fed put is on standby. It can happen if necessary. And meanwhile, the Trump put is back because thanks to the sharp sell-off in the stock and bond markets, the Trump administration has become a little less aggressive in the tariff area and seems to be looking for deals. And so I think they're going to have to declare victory on this issue by the summer and move on to other issues that will help the economy. This is not a development that is good for the economy. And if it's not good for the economy, they very much have to worry about losing the midterm elections in Congress at the end of next year. And it's not too early to start worrying about that for the administration.
Two things. You mentioned, again, in other outlets, and again, I've been reviewing with the production team, that you're seeing that the rates should be, I mean, the 10 years potentially around 450. Today we're at 416. Yeah. And not only that, but if you really take into consideration that we are pricing the ADP this morning, and today is the last day of April. So if somebody's seeing this show after April 30, so we have the ADP at 62,000. We don't know what is going to be the non-far on Friday, the first Friday of May.
Right.
But what is your opinion if we have a collapse on unemployment and also people laying off, companies laying off people because they don't know how to price, they don't know how to really add with this huge tariff. And you mentioned that you don't think the Fed might cut, but that will accelerate their dynamic. Of course, if President Trump is knocking and saying you have to cut rates. What do you think about that, Ed?
It's a sensible scenario. It's certainly possible. I think we're going to see some very strong consumer spending in April, May, June, because a lot of consumers are scrambling to buy before the prices go up. A lot of consumers are going to be concerned about kind of a COVID situation where certain products are not available at the stores they go to. So we may have some actual strength in consumer spending, but you're right. We could have some weakness in the employment front. ADP was weak. We'll see what non-farm payrolls do on Friday. We're looking for 150,000. Maybe it's going to be 100,000. I don't see a collapse in employment. We already have some employment indicators that suggest the labor market's still doing reasonably well. Workers are hard to find, especially skilled workers and good workers. So I don't think companies are just going to fire people. Maybe they'll slow the hiring pace, and that could lead to an increase in the unemployment rate. But again, I think the market has already discounted some weakness in the economy, some weakness in the labor market. You know, over the past 3 years, there's a lot of talk about a recession. We were among the few that said that we thought the consumer would remain surprisingly resilient. And that's because there's a lot of baby boomers that are retiring. And the baby boomers have $80 trillion, not billion, $80 trillion of net worth. And as they retire, they're spending that money. And that's one of the areas of strength for consumer spending. And capital spending is actually being held up by technology capital spending. There's not much evidence that that's suddenly going to collapse. So I think the resilience of the economy will show through, and I think it showed through in the first quarter because sales to private domestic consumers, including businesses and individual households, that was up 3%, which is really quite impressive.
Listen, I'm very happy that you are super positive because obviously I'm on a perma bull, and it's nice to see you so basically looking forward 2026. The other thing that captured my attention, and I think it's important for the people to understand this concept, is that obviously you mentioned that there was an uptrend on the dollar that started in 2010.
Yeah.
And I was listening you saying that even though we have some retracement, and if you see the dollar index, it was around 9% or so, you're mentioning that there is other methods that the Fed and other important institutions measure the value of the currency, that you see the retracement a little bit lower than the 9%, of course. But there is other people telling us that in the Mar-a-Lago, which is this place where President Trump was previously to Jan 20, they were discussing the devaluation of the dollar as part of the policy. So I want your explanation on that, because it's pretty important to understand that, which affect the carry trade and few other trade balances and stuff, specifically with other countries that have a lot of influence, like the Japan economy, and obviously few other countries. I want to understand that a little bit better, because obviously we see the euro now going at 114. Yesterday I think it was 115, or a couple of days ago. People are calling it 125, and I obviously want your opinion on that and the theory behind it, please.
Well, look, a lot of people look at the dollar index, the DXY, sometimes called Dixie. There's futures in the Dixie. The problem is the Dixie has fixed weights for countries. So the euro accounts for more than half of the Dixie index, of this so-called dollar index. It's not a trade-weighted index. It's a very very fixed kind of instrument, and it's basically reflects the volatility of the euro. The Federal Reserve puts out daily data on a broad trade-weighted dollar. By the way, the MSCI organization also puts out a similar index. And what that shows is that since the beginning of the year, while the dollar fell by about 9% on the DXY basis, on the other basis, on the actual trade determined basis, that was down about 4.5%. This is not exactly a calamity. This is not a major devaluation of the dollar. And there has been an upward trend with a lot of volatility since 2010. And I don't think that changes. I do think that central banks are trying to diversify into gold. And maybe some of them are diversifying their reserves into euros. And global investors, I think, jumped out of the Magnificent Seven at the beginning of the year as they started to decline, and went to Europe and maybe to China to find lower valuation multiples. But I don't see a lot to get excited about in either China or Europe. And meanwhile, the United States, as the world's largest capital market, it's the most liquid capital market, and the U.S. economy is still the world's major consumer economy. So I don't see that the dollar is going to go into a major depreciation here.
Listen, we have around 40 seconds, 30 seconds, but I need to ask you about these people that are basically calling that we might see deflation. And obviously the oil today is down almost 4%, and it's been coming down and coming down. And they say now that the soybeans and few other commodities are starting to see a kind of a correction. What do you think about that? And obviously that's not right now. It might be the last quarter of 2025, but it's extremely important in terms of interest rate and all the dynamics. And you call that, no, capital expenditure has been going up and you see a resilient economy. But obviously the Chinese let's say, deflation might be contaminating the whole war. And I want your opinion. I think you're a great expert explaining that to the audience there.
Well, look, deflation is not a tragedy. There have been periods of deflation that are associated with productivity, and I do think that productivity growth has been making a comeback, particularly in the United States, and that could help to actually keep a lid on inflation and maybe even produce some deflation. Oil is a very important commodity, as other commodities like soybeans, but oil is particularly important because it is such an important input for just about every industry. And I think that the deflation we've been seeing in the oil market reflects the fact that there's plenty of oil around. The supply is ample. The president of the United States has made it clear that he'd like the United States to produce even more oil. And at the same time, the demand for oil is being affected by electric vehicles. China has moved very quickly to electric vehicles, so they're increasingly using electricity rather than gasoline to power their cars. I think this was a very welcome development. Lower gasoline prices is a very, very big plus for global consumers. It makes them feel that inflation is coming down. It does have an immediate impact on their purchasing power, and I don't see anything wrong with that. I think it's a positive.
Listen, thank you. Thank you for coming to Negocios TV. We want to keep inviting you from time to time. There is a lot of changes that are going to happen in less than 4 weeks. What are your opinion towards mid-May? We're going to do some announcement next week. Probably we're going to do a few things here in the US, and definitely we want to bring you on again. And thank you for everything. Pleasure.
Yeah, all the best to you. Good luck. Thank you.
Thank you.